Jordan Toy from Legacy Family Wealth joins us now for a look into the day's trading session. Jordan, thanks so much for your time this evening. Now, all that glitters is really proving to be gold. And I know this might be an obvious question, a question that we have to ask you on a regular basis. But does this rally still have more legs to run, more room to run? I mean, with the geopolitical tensions still at bay, as well as what's playing out in the US when it comes to the Fed independence, it seems like we're in for another year of gains for precious metals.
It's certainly the question on everybody's minds. I think one has to be very cautious about projecting continued volatility of this kind of nature. So gold's obviously touching all-time high after all-time high. Do we have continued sort of volatility and political or unpredictable political events that take place like this for the coming year? It's very possible, very difficult to predict. I mean, sitting a year ago and someone having told me that gold would be at $4,600 would have been a bit of a stretch, but here we are. So it's an unpredictable world we live in, and I think this is the exact reason that a balanced approach makes sense, where you have, not your entire portfolio allocated to one single asset, because the nature of politics, especially, which is moving markets today, is extremely unpredictable.
I mean, Jordan, one thing remains certain, that uncertainty remains the name of the game. Let's take a look at what's playing out in the US with the Fed's independence under scrutiny. And I'm wondering how the investigation and the outcome thereof affects how the Fed functions moving forward, especially with that new Trump chair pick.
It's definitely a threat to Federal Reserve independence, which I've been saying for some time now. What I think stood out to me, and I was quite surprised by this announcement, and I still am unclear as to why the US administration would want to do this now, or undertake this action now, when Jerome Powell's term as chairman ends in May. The investigation itself, or he hasn't been formally indicted yet, but I think that it seems like they're clutching at straws to a degree. The misleading testimony that they're referring to, the Fed itself has rebutted. And you saw that in that video response from Jerome Powell himself. I thought that video spoke 1,000 words to me. It had a lot of color to it, which is, very unusual for anything coming out of the Federal Reserve. But I suppose these are extraordinary circumstances, so an extraordinary response is definitely warranted. There were certain things that also jumped out at me. So there was I believe it was a Democratic senator, was talking about, or I was perplexed to hear him say that, this actually brings into question the Department of Justice's independence, which for me has already been in question for a number of months, right? We're seeing a pattern here where the US president is appointing individuals to run organizations that largely seem to be sort of towing the line and doing his bidding. And I mean, this is the exact reason that the Federal Reserve governors serve a term of 14 years. It's designed to be staggered so that a politician cannot stack that board with people who will largely do his bidding. And we're seeing that, the case against Lisa Cook is still in the works. We're now having him tackle Jerome Powell. It's clearly in an effort to get people on the Federal Reserve Board of Governors that will do his bidding. I think the one spanner in the works could be here that I'm not so sure about how Jerome Powell responds to this in terms of where his term as chairman ends shortly in May, but he can stay on, as that video played earlier, he can stay on until 2028 as the governor, which is very unorthodox, but it is something that is possible. And I do question whether this is maybe not frustrated Jerome Powell enough to take that action, but whether it makes him feel that he needs to stay on to protect that Federal Reserve independence, which is clearly under threat.
And that was going to be my next question, whether Jerome Powell will stay on the board, the Fed panel, even when he steps down from the chair position. And just on the Department of Justice's independence, I read something interesting around Republicans and Democratic lawmakers also blasting, what's been taking place, saying it undermines democracy as a whole. I want us to stick with news out of the US, but shift focus to President Trump calling for credit card costs to be capped, adding that interest rates on cards should be limited to 10%. Not much detail on how this would be done. Despite that, markets reacting to the news, I did see global banking shares ticking lower. Maybe just walk us through the impact this would have on the lenders, on households, as well as small businesses.
Yeah, so quite a strange one for me as well. It seems like the US president's having a very busy start to the year.
Yeah, keeping us on our toes.
Exactly, keeping us on our toes, and certainly keeping the banks on their toes. I mean, we have all the big banks coming out with earnings in the US later this week. And I mean, if you looked at across the board, I mean, JP Morgan was down, I think, 3% when I last looked. These are massive moves. I mean, I haven't totaled it up, but the amount of market cap loss today is significant across, Visa, MasterCard, JP Morgan. All of the big banks are taking a knock, and rightly so, because I think that this is definitely politics at play, right?
Yeah.
It's a good headline to say, let's cap credit card interest rates at 10%. The credit card companies are criminal in how they, the interest rates they charge, and I'm using that word criminal very lightly, but I feel like that's the politics at play. And this is not a proposal that the US president came up with. The Democrats, so Senator Elizabeth Warren has been talking about this for some time. But wherever it came from, I think that the outcome is going to be the same, right? So there's a reason debt is priced the way it is. It's to compensate the lender for the risk that they're taking. And I think the likely outcome, and you're seeing the US banks and the banking associations say this, if you simply cap credit card interest rates at 10%, many of the banks are going to be losing money on these credit cards, but it's just going to dry up lending because banks can't afford to take risks and lend to lower credit quality customers where they potentially are going to take losses, and they're not going to be reimbursed for those losses. So I don't really see this one getting off the ground. I think what's likely to happen is you'll just see lending dry up, and banks will just tighten up their lending restrictions, and you're going to see families and small businesses across the US being really hurt by this. So I don't see this as being a realistic proposal.
All right, and quickly before I let you go, we've got about 30 seconds. What is your stock pick?
So I wanted to talk about Netflix today. It's obviously been in the news a lot with the Warner Brothers offer still on the table. I see Paramount seems to be fighting quite aggressively to get their offer sort of back into consideration. I think it's a relevant one to keep an eye on because Netflix has earnings out next week. And if you take a look at some of the forecasts, the prediction for earnings per share is quite a decrease from a previous quarter. So we'll have to see where that comes out at. The Warner Brothers offer is definitely an overhang on Netflix's share price at the moment. You can see it if you look at a chart of sort of the one-year performance. I think a lot of that is to do with the regulatory barriers that have to be overcome, but also there's a sort of a north of $5 billion breakup fee that Netflix has agreed to there in terms of if that deal doesn't go ahead, it's going to cost Netflix pretty significantly. They clearly have a high degree of confidence that this deal will go through. I think the other risk for Netflix here is that it's quite a step outside their usual model, right? Their model up to this point has been organic growth in the streaming space. They are reaching a mature point where they can afford to take on these deals. But I think regardless of where the share price has moved over the last year, and we'll see what happens with this deal, I still think that Netflix is one to hold in the long term. All
right, let's leave it there. Jordan, thanks so much for your time and sharing your insights with us this evening. That was Jordan Toy from Legacy Family Wealth.